Good morning. So yesterday, Trump made his threat on Twitter against North Korea. North Korea decided to say they're getting ready to attack Guam. It's actually not funny, but it's just indicative of what we've been dealing with since Trump's been in office. Now, the market, we've talked about this many times before in the morning meeting. The market does not react to these normal macro events the way it did in years past. A bunch of factors in there. The money that flows in and out of the market is more systematic, much more systematic, less managers who are reacting to political events, things of that nature. So once again, the market did have a reaction. It's a pretty large down move in relation to the extremely low volatility we've seen. We did just have an upside breakout in a new all-time high intraday yesterday, and we are $2.50 below that right now. But my expectation would be, just like all of the other times, until missiles start flying, the market will go back to business as usual. I don't know if it's going to happen this morning, this afternoon, or tomorrow, but it will go back to business as usual, most likely, extremely likely. So, looking at where we are, if you look over the last couple of weeks on the SPYs, until we broke out to the upside here, I think we were buying in this 246.80 to 246.50 range. We are holding below that now. So now remember, anytime there's a catalyst, any type of gap down, we'll look at those prior support areas to see if the market goes to rally up and fails there. If that happens, then our mindset will be, hey, maybe there'll be some overall weakness today. So the first spot to look for that is really between 246.5, 246.70. We're right below that right now. And that would be the first spot. The easier spot, or the better risk reward spot, would be if we pop back up to more like 247 or a little bit above 247, just to give us a little bit more downside to the next support below the pre-market low at 246. So that's my thought process there. I want to take a look at IWM. IWM, we wanted to test at 139. We got it. We're right there in the pre-market. So this band right here that we've been looking for the test was the top of the prior consolidation range from December to like March. And so if we come in here, we rally back up to 140, fail there, and then close below that, that could get interesting for some further downside. And this, remember, when the SPYs broke out to a new all-time high yesterday, IWM did go with it. It was actually trading together, but still, if you look at it, relatively speaking, still making another lower high. Let's take a look at the Qs. So Qs, we had our spot was 144.40 to 144.60. We were looking at the short. That worked the other day pretty hard right here. Came off a couple bucks. With the market overall, all the indices moved up together yesterday, and they all sold off together. And so we're just right back into the support area. Not quite as low as where we flipped to long the other day, below 143. I think it was 142.70, I believe I got long. So we're a half buck above that. So clearly IWM still the weakest. Then comes Qs, then comes SPYs. So let's watch 143 on the open here. A flush down to below 142.80. That would be interesting to me as well. If we flush down below 143 to 142.70, 142.80, we want to see if we can get back above 143.20, which would put us right back into this consolidation range from the last week and a half. All right, a few stocks. Disney's the big one. The news after hours that got Netflix to go down was Disney was going to do some streaming service, blah, blah, blah. The analysts are already out saying that's really not going to impact Netflix. It could be a positive for Disney, though. But clearly, they announced these new streaming, ESPN streaming and movie streaming to try to stem the bleeding a little bit. Here's the daily on Disney. It had a nice rally back actually from the low 90s, but really was a short from around 112. When was it up at 112? Oh shit, it was there again. So it double topped at 120. And then we were looking at it, because this gap up here, wow, that's a while ago. It's like a year and a half ago. 115, now it's gapping below the recent pullback low of 102.80. It's 104. 160 offer right now. So everybody was buying here between 103 and 108. They're out of the money. There's really not much to 100. One of three. Okay, so the first, they took it down to 103 in the first move in the after hours. It tested it again. Now we're below that. So what we want to see is what happens if it comes back up there again. Does it fail? Does it take out the pre-market low? Does it head down to 100 where you would expect buyers to be into 100? Does it rally back up, make a higher low here, not go through the lows, and then start to hold above 103? You would look for the larger, the bounce back up to 104, 104 and a half. It should be, it's going to be very liquid. It could be, there could be at least 2 or 3 good trades in it today. That's why I put it first. Sometimes during earnings season, it comes out on days where I don't even talk about it. But I think, just looking at stuff early today, this seems to be a good place to look to trade. The next one is ACAD, ACAD. This is going to be a thinner stock. It was up at 35 earlier, or I should say in the after hours. Let's look at the daily. And based on, we drew a potential resistance range, potential support range. Right in the after hours, it got up there to 35, came in. They're trying to support it here at 32.60ish or so. Can't rally back. It's now a little bit below that. But any type of, could look for a bottoming in this area right here, close to 32. Then you see it holding back above 32.60. Look for the rally back up to 33.5, 34. And faded into 35. Holding below 32 would not be great for longs. YNDX, they announced a joint venture. No idea if this is actually going to be that material to it. And we do know, if we look at it on the 30-minute, we do know after running up to, so after it had this big move here, we were looking at it, consolidated, couldn't get above 32 like 4 different times, broke to the downside. It's now gapping up higher. There's probably some people who are going to be motivated to sell it between 31 and 31.5 and 32. It already failed up there at 31.5 in the pre-market. Hopefully you get a spike back up there and a chance to sell it to see if it fills this gap. VRX was strong in the morning. This was probably my best stock in the morning. Shorted it right on the open at 17 or right before the market opened. Flipped it back to long into that spike down. To the spike right here, came up and then was strong, consolidating above 16.5 before the nuke rain fire down in North Korea, and then boom with everything else. It's holding about 15.5, traded on the long side. Otherwise, see if it comes in, pulls the support, tests the support from the last few days. I would be an aggressive buyer of it, close to 15. Coors, very impressed with it holding up here at the 45 area, closing at the high. Here's the daily. Close above $44. The next thing is 46. Anytime a big gap like this and closes not quite at the high, but top 25% of the range, you do have to think about more upside. So that would be my mindset there. RL, also really impressive. There's some, these are both retail names. I guess they're both high-end retail names, and the retail sector has been so out of favor. This is, I guess, something to pay attention to. The fact that both of these gapped up and were able to close at or near their highs. 90 to 91 is the most obvious spot for RL on the upside. FGEN. So FGEN, it did have a nice bounce off of 48 intraday. That was our ultimate support in yesterday's game plan. If you check that, it went there, it bounced $3 from there maybe. I thought that it did a nice job of holding the gap overall, even though intraday the sellers maintained control from the pre-market. You can see that pretty clearly now as I'm zooming into the chart. Did bounce off this 48 very, very clearly, back up to this 51. So now you have basically 48 by 51. You get a consolidation above that area, you can start to play it for more upside. If it's consolidating, let's say below 50, can't get above 50, and you want to play it for a move to 48 and see if it actually cracks, that would make sense as well. And then DF, which I bought a little bit above 12 and just held it the rest of the day, never got stopped out, came down to 1180 at the end of the day. Looks not good, looks like a good short as a second day play. So it has no support really in the last few years below these levels. You see in the morning, it tried to bounce from 12, got held above 12 and just never really went up. And then in the afternoon, wasn't really impacted probably from the overall market, just natural selling, slow selling the rest of the day. So alerts at 12, alerts at 12:20, alerts at 1180, and then I would probably have an alert at 1150-60 to see if it goes a little bit below yesterday's low and there's natural buyers would be into 1150. So that's it. I have doctor's appointments this morning, so that's why I did the meeting early. Most people are going to be watching it as a recording. And good luck. I should be back in the late morning.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.